Wondering why it's a good idea to submit your tax return early? Well, watch on. As business accountants, my team and I spend all day long helping business owners on their journey, and of course, one of the things we do all the time are tax returns. Now, quite often as accountants, we're saying to people we want to submit your tax return early, and people wonder and ask us, well, why is that? And actually, I think it's a fair question. And you can see from the stats that the Revenue and Customs send out every year that a lot of people do it at the last minute. In fact, there's quite an interesting stat about the amount of people actually take Christmas Day to do it. So, and I know I've got one particular client who loves doing it on Christmas Day, or at least getting his information ready for us on Christmas Day. So it really is something that people do quite often leave to the last minute. But in this video, I just want to tell you a few reasons why it's good for you. And I said 3 when we were recording the video, but actually there's a nice 4th bonus one at the end. So before we get into it, if you like these types of videos, make sure to click subscribe below so you get notified whenever we release more videos just like it. Okay then, so why should you? Well, number one, if you're in the realms of needing mortgages, loans, any form of lending, you might want a mortgage reference, all these kind of things, a rental reference, anything like that, you're going to likely need proof of your income. Now, when you're employed, that's easy. You've got a pay slip, right? You just give it to them, or a P60 as they're known, a form that at the end of the year says that's what you earn. But as a self-employed person, quite often your tax return is that document. The front doc on it, they call it an SA 302, is the kind of term that's used quite often. It's like a tax calculation and says, look, this is what this person declared to the revenue, and this is how the tax was worked out. This is the tax bill, and it's that document. Now, if you need a mortgage, you've normally got to supply those documents, quite often a couple of years worth. So we always have a scramble just around the end of the tax year, just after the 5th of April, where people have been waiting for their next year's SA 302, their next year's tax return to go in, because they might have had improved income, for example, and they want to be able to prove that proved income. So getting that in early is really going to help if you're looking for lending. It really is. There are some people who might leave it a little bit later if they don't want to show the drop in income, but generally people are fighting to get it done to get that increased income in, especially I think as we've had a bit of a weird year with coronavirus and things like that. There's a lot going on in the mortgage market in terms of proving your income at the moment, and it's been an interesting one to watch. So definitely get that return in and get it there so you're ready and armed if you're going to renew your mortgage, change lenders, get a new house, first time buyer, all that kind of stuff. So number one, proof of income. Number two, if you're lucky enough to have to pay tax twice a year, then this could impact on your July payment. So the way tax tends to work, once you need to pay over £1,000 of tax, generally, there are some circumstances where this isn't the case, you have to pay twice a year. You pay once in Jan, and then they ask you for the same amount up front in 2 chunks. So if you had to pay £1,200 in January, they'd also want another £600 on top in that January, so £1,800, and then they'd want the other £600 at the end of July. And they're guessing that you're going to carry on doing the same amount of money that you did in the tax return you've just submitted. That's okay, but in the self-employed world, it's not always the case. And sometimes, especially with the last couple of years we've had with coronavirus and lockdowns, you might have dipped. And in actual fact, it could positively impact that July payment. You'll never be asked for more, but you might end up not having to pay it. So quite often if you knew your second payment account was like £600, using that example, and you had a worse year, it could be less when you submit the tax return, or it could even be none, or they might even, in a really good world, owe you some money back. So doing that can really at least put you in the picture, even if you've got to pay more eventually, but also just lets you have a look and see, well, actually, do I even need to pay that payment? Can be a big cash flow advantage. Any extra will still be due on the 31st of January with any other balance in tax bill. And there's a really good thing there to be able to know what you've got to pay, both in July. So July's won't change if you had to go into July's if it's more, but then you'll have a balance in payment in the next January, and knowing what that is means at least you can kind of plan for it and you know what cash in that bank is yours. So really, really good for impacting your July payment on account if you've had probably a worse year or had some other changes in your circumstances, or at least at minimum knowing what you've got to pay in Jan. So that was number two. Thirdly, the kind of obvious one, peace of mind, right? It's always good to know that it's done. You're not going to scramble around later, and also avoiding penalties. I mean, the penalties for not submitting a tax return are horrendous. You get an instant £100 fine. It very, very quickly gets up to £1,600. There's another video on the channel where we detail what happens if you don't submit them, but ultimately there's no need not to. They're all there. And even if you don't have an accountant helping you, there is a free tool with Revenue and Customs you can sign on and at least give it a go. Even if you muck it up, at least you've submitted it and you avoided the penalty. There's also a little known thing you can do if you really struggle to get the figures. There's a box you can tick that says that you've got provisional or estimated figures, and then you could potentially go back in and amend it later. But in all best practice, you obviously want to get it right first time. So that was number 3, avoiding the penalty. So I did say I'd talk to you about a bonus number 4, and that bonus number 4 is being ready for any random government support. Now, normally in years past I would have never talked about this, but where coronavirus hit and we had lockdowns, suddenly there was, if you've submitted your tax return, we're going to give you extra help, or we might look at this, we might look at that, and it really mattered. Deadlines absolutely ruined some people who weren't up to scratch with their affairs. So getting that in just means you're ready for the unknown, and that's something that is new but very, very relevant. So just get it in, you know it's done. It also adds to that peace of mind, but it just means that if there is some kind of weird further lockdowns or other schemes, at least you know it's in, and there's no chance they're going to say to you, actually we didn't have it at the right time. So bear that one in mind. And that's it, 4 good reasons to get in your tax return early. And if you do need any help with this, of course, seek out professional advice. But otherwise, there are those tools online. If you've enjoyed this type of video, make sure to click subscribe, share it with your friends, people who need to know, and we'll see you in the next one.